Good morning. You're watching the market right here on 18 Now with me, Aisha Faridi. I'm on the Bash, Nikunj Dalmia in the studios. And for our markets, we're chugging along quite nicely. Even yesterday for the futures, we're already at that 20,100 print. Managed to close above that 20,000 mark after the first half volatility or weakness that actually kicked in. A lot of economic data points as well to react to this morning. Of course, it's US where inflation data has come as per expected lines. The headline CPI, remember there, rose 0.6% on a month-on-month basis for the month of August and 3.7% on a year-on-year basis. Now, this clearly reflects high energy prices in that region, and the core CPI as well shot up about 4.3%, accelerated in about 6 months' time. So that's pretty much it when it comes to the US CPI. The big question, of course, now remains to be what the Fed action is going to be.
I think it's too early for anyone to assume that the Fed is going to increase rates.
Yeah.
I mean, one thing is granted, that they will not cut rates. And that changes the beginning of the year narrative, that when everyone thought that inflation will peak out, Fed will hit a pause button, and then the drop in the US economy in a sense could really force US Fed to cut rates. What's important here is that ahead of the inflation data in last couple of days, US markets have slipped into what could be called as the September seasonality. The Dow has done precious little, Nasdaq has done precious little. After that big bumper rally, what we saw in some of the US AI denominated stocks and post the Nvidia numbers, none of the global big markets actually are showing any kind of an excitement. India is a completely different kettle of fish, and we'll talk about it. But globally, I think more than any bullish pattern, I think it is simply sideways consolidation, which is clearly on. There is no panic, there is no excitement. It is simply what happened to benchmark indices, let's say, a couple of weeks ago. They just slipped into a range and then they remain in that giant range for an extended period of time. I think that factor is at play.
Yeah, you're not seeing much of an elevated reaction, or for that matter, even in the pre-market rates for US futures. And that's pretty much the texture across the board as well. Even if you were to take a look at how Asia, for instance, is panning out, there's not really a whole lot to draw from there. Of course, Japan and Korea are really, holding up very, very smartly. But that's not the case with the Hong Kong, Shanghai, or for that matter, the other periphery markets as well. So yes, once again, the GIFT Nifty is indicating a very mildly positive start, but I guess the headline number continues impressive.
Absolutely, and that's what we're tracking here on D Street. And yes, the 20,000 print was intact, at least for yesterday's trade. And you did see the rebound coming in across the board, so it wasn't just isolated to the frontliners. By the time we wrapped up the trading day, even the small cap index, actually, barring the mid cap index, managed to eke out a gain of about 1% or so. So you did have it across the board buying, but barring auto, you had and IT, it was pretty much all the sectors that really participated. And in particular, it was notable that the PSU banks managed to rally hard and fast, incidentally the most since the 3rd of March that we've seen. But what's the trend when it comes to the liquidity situation? You did have selling that continues from the FIIs. For instance, in the last 10 sessions in the cash market, the FIIs have sold close to 10,000 crore rupees, while the consistent buying, Nikunj, for DIIs, that remains intact.
See, Avan, first you got to say that, okay, what happened on Monday versus what happened on Wednesday, complete mirror image. The snowball effect of that brutal selling on Tuesday has not translated into an ugly reality. So we did see a bounce back in mid and small cap stocks, but in particular PSU stocks. So there are a couple of constructions. So the scenario, I think, is very visible, that small and mid cap stocks which were in this relentless rally, that rally has hit a pause button. And now you will see volatility. So linear move in some of the defense, power, railway stocks, what we saw as a linear move, I think will now become a volatile move. They're not going to fall, but I think they will turn volatile. And we've already seen traces of that in yesterday's price action. Then you look at large cap stocks. I think a rotation from small to mid cap is on. If I look at brokerage reports, if I look at the positioning of the market in the last couple of days, the margin of safety and even earnings upgrade, everything I think is there in large cap stocks or semi large cap stocks. That's where I think the market puck is moving, and you've seen evidence of that in last 2 days, that how smartly large cap stocks have outperformed. Within that, I think it's banks, and within banks, since we are talking about momentum would be there in PSU banks, and the real trend, I think, would be in large cap financials. So large cap financials will lead the market mood, but they will not be percentage gainers because they are large in size. The spikes or the outperformance for a trader and for an HNI investor will come in PSU banks. So the template, I think, in a sense, has been is something what we've been, preempting, that the craziness in the small and mid cap stocks, I think, has hit a pause button. Large stocks are looking attractive, and within that, banks have potential to outperform.
Yeah, and that's exactly what Bank of America India's strategy as well is. They're pretty much, spelling the same that we've been flagging off the past couple of trading sessions, that small and mid-cap euphoria is going to fade, and the opportunities now are within large caps. They're saying there's a 2% upside for the Nifty, and the year-end Nifty target now stands at 20,500. But even if you look at that price target, Nikunj, like you're saying, it's a pocket of the Nifty that's going to contribute. Banks which haven't participated in the last lap of the rally, it's not an across-the-board move because we're already practically at 20,100. So we're not looking at extreme upside from here, about 400 to 500 points at best.
See, Aisha, this could change. At the beginning of the year, nobody thought that Nifty would rally at all.
Yeah,
at the beginning of the year, the most bullish outlook was a 3% uptick in Nifty. And 9 on 10 brokerages actually were of the view that we would be in for a flattish year of no return per se. And this in a sense was a consensus view. See, what really matters is the bent of the economy, the flow of liquidity, and underlying valuations. Valuations are not stretched. Valuations are expensive. Earnings, well, you can argue that earnings are not great, but if we get a tailwind from, let's say, festival season or perhaps from drop in commodity prices, margin expansion could come back. And then the joker in the pack still is flows. I mean, nobody expected at the beginning of the year that the flows actually could be very large and they could, surprise everybody. So both domestic flows and global flows, I think, are not that scary. The chink in the armor, Aisha, really would be that what happens to the IPO market, what happens to the fundraising. Because if flows are really diverted in new funds and new IPOs, then there is a bit of a challenge here. See, Aisha, I was looking at previous data and speaking to a lot of folks, and I've realized that this is not the end of the bull market. The bull market, if you look at the history of the bull market, whenever they've peaked, it's happened because of global events. I'll give you some examples. 2020 COVID, that really caused that panic in the market. 2013-14, it was that entire humdrum which was happening in the Eurozone. 2008, it was GFC crisis, and before that, it was 9/11. So for markets to peak out, something has to go wrong globally. It's not going to be inflation. It's not going to be a little bit of earnings upgrade here or there. We may go through a time-wise correction. We may hit a pause button, but that's about it. I think for large cap stocks and for India in general, the bull market is alive. The problem is the frothiness which had happened in small and mid cap stocks, and I think that will take its time before it gets cleaned.
Okay, so
Just incidentally, by the way, we hit the all-time high first 20K on 9/11 only, Monday.
Yeah. Actually, think about it. I mean,
Yes.
9/11, it was like really long time ago. I was a cub reporter that time. I just finished my morning shift. I had gone home and suddenly get a call from the office landline. Pe phone aaya tha, mobile bhi nahi
There
tha.
was no mobile that time.
back then, yeah.
And then I didn't know how to react. I was too naive to understand anything. All I remember, I rushed back, and the market didn't even strike us.
Yeah.
And next morning, then you get up and you say, okay, Asia was down. They had to shut Nasdaq.
I'm sure.
They had to shut Nasdaq and Dow. I mean, the US markets were not trading that time. They had to shut the flow for a week. US markets did not trade for a week, I think.
Well, the events back then, but yes, the markets died over all of these events. But let me take it across to Harsh then on that note and understand what the global commentary has been after the CPI print, which has come in a tad bit higher than what the street was anticipating. Harsh?
Right, good morning. Let's quickly first take you through what Mohammad Al Arian has to say. Extremely interesting views. He believes that after the initial spike with regard to what we've seen with inflation and CPI inflation numbers were broadly in line with what we were the market in general was penciling in. We saw a spike in US yields though, which now, or rather later in the day yesterday also were largely unchanged, and the popular media headlines he believes will focus on the inflation rate that is now at 3.7%. He believes core also at 4.3%. is up, or probably core has cooled off a little bit, but inflation is up for a second consecutive month. And he believes that there is still a possibility of pass-through from higher oil prices. That's one risk. With regard to where rates are, he suggests that this time around there won't be any change in rates. This inflation print is not going to deter the Fed from holding its or pausing its rate. But of course, come the November rate cycle again, one will have to wait and watch as to what that decision will entail. So a fairly large comment coming in from Mohammad Al Arian. Let's quickly move on to Peter Schiff. He believes that hotter than expected CPI reports, investors of course need to figure out as to how many of them will continue to come through. The Fed rate hikes have been completely ineffective in his view to contain inflation to 2%. Since borrowing and spending have continued unabated, he believes rate hikes are ironically actually adding to the inflation pressure. Very, very interesting comment coming in from Peter Schiff. Let's lastly move on and take a look at what Larry Summers has to say. He believes that it's a narrow window to achieve this soft landing. There is no sign that this is a 2% inflation economy. The Federal Reserve is right to be data dependent. He is backing the Federal Reserve. He says people need to be very careful with regard to declaring victory already. And with regard to asset prices, he's saying that you have to be more careful with regard to certain assets, especially the stock market. He believes it may be priced a bit too much for perfection, with more room to surprise on the negative than the positive. Again, a very interesting comment coming in from Larry Summers as well.
Thanks very much for summing all of that up for us, Harsh. Let's get a move on and chat technicals. We've got Naresh Mirani and Kunal Bothra here to do just that. Good morning, gentlemen. And yes, indeed, Kunal, that print of 20K by the time we shut shop is what I'm sure you're tracking quite closely. What is this indicative of by way of levels, given that it was across the board, barring, I guess, auto and IT that participated?
Well, yeah, so it was a good day for the markets yesterday, especially given the handover, what we discussed, what we saw on day before yesterday, when the index had seen a sharp, I'm not saying index had seen a sharp sell-off, but more of the mid-cap names and the market breadth had seen a major correction, many of the stocks falling by 5 to 10% on an average. Now, yesterday was a good comeback, large cap names, which was very interesting to try and see many of these stocks making a comeback, whether it's Bharti Airtel, whether it's the likes of L&T, etc., which have done reasonably well over the last couple of days. Now, the data which is very interesting is the Bank Nifty, because in the last 5 days, there has been 3 lakh contracts or 3 lakh futures on the Bank Nifty, which has been unwounded, which means that there is a major unwinding of short positions on the Bank Nifty. And in the last 5 days, Bank Nifty has risen by almost 1200 to 1300 points. So that itself tells you that there is a major round of short covering which is going on in the banking index. The premiums for the banking index is still at 100, 150 odd points. So that also indicates that the short covering is at its full swing in the banking index. And the underperformance for the Bank Nifty, that would start to now play a strong catch up. So the data is very strongly tilted towards the Bank Nifty and the banking index. And specifically in the banking internals, private sector banks and PSUs, both of them are looking attractive for a change.
All right, let's find out what Naresh is mapping out on the charts. And Naresh, come in on levels on the Nifty Bank Index.
So the Bank Nifty looks a little more interesting for the fact that it has still not crossed the previous all-time highs of 46,300 odd roughly. And the trend is still left to catch up with the Nifty. Nifty has gone above the previous all-time high. So I would expect ideally, given the structure of the banking names, we could go and test all-time highs going forward. So it remains a buy on dips and a hold on the current situation right now. And once we cross 46,300, then we can review the stance. But overall, the bias is positive. Closer to 45,500 should act as a support for the short term.
Okay, let's talk individual stocks then. And Kunal, I'm guessing you have a large cap bias in your picks?
Yeah, tilted towards the banks, mix of large caps and a semi-large cap name. PNB is something which I would recommend as the first stock from the PSU banking stocks, given a breakout yesterday above 70 levels. Excellent chart on the medium-term basis. Would suggest a buy with a near-term target of 78. So my earlier targets were 75, revising it marginally higher to 78. Traders could look at a fresh buy and keep a trading stop loss of 69 on PNB. Bank of Baroda is also the other stock which has given a breakout, even though the stock has not given a multi-month breakout. But I believe the stock has given a swing breakout, which could result into a multi-month breakout for Bank of Baroda as well. So 220 as a target, stop loss at 200.
Right. Naresh, what's on your radar this morning? What stocks would you recommend to our viewers?
Two large cap heavyweights again. First is the bond ICICI Bank. The stock is setting up for a move into all-time highs. Consolidating around the 990 mark once it crosses 1010, which is the previous all-time high. Would see a quick move towards 1080, a buy at current levels as well as on dips with a stop loss at 960. Second is a bond Bharti Airtel. The stock has slowly moved into a fresh all-time high. Yesterday was a good tick as well as a decent enough close. A fresh breakout here, flag breakout done. And slowly and steadily, the stock could go up towards 960 to 1000 in the short term, stop loss at 900.
Okay, there you have it. Those are all your top trading recommendations being flagged off by our chartists. Time to find out some stocks that will be in the news today, and we've got Anisha right here to discuss that. And let's put the spotlight on that mega land deal, Anisha, by Bombay Dyeing.
Oh, well, yes, Bombay Dyeing, that was the biggest newsmaker last evening. Of course, we understand that they have tied up to sell 22-acre land, and they're doing a deal of almost 5,200 odd crore rupees. So, after that mega deal that had happened on account of the Dharavi slum redevelopment, this is one of the biggest ones that we have seen in Mumbai of late. The land is, of course, in Worli, and it's a subsidiary of Sumitomo. Remember, this is something that ET Now as well had told you earlier itself. So, the confirmation of the story really coming through. The selling will happen in two phases, of course. The first phase will be in October itself, and the second phase will be later. The development of the unutilized land parcels would be also, there would be a tie-up with the company as well, so there is that upside as well. In terms of the impact, well, the net worth of the company would turn positive because they will become net debt free, because that was the challenge with Bombay Dyeing, that they had debt of almost 4 to 5,000 crore rupees. And going forward, they said that they have potential to create 35 lakh square feet of residential as well as commercial property and generate a revenue of almost 15,000 crore over the next few years. So a mega deal happening, and I'm guessing, Nikunj, the skyline that we see in Worli is about to get changed.
Yeah, more traffic for us.
Well, it's right here across the
Right
road. So
outside
I'm
our
wondering
office.
whether it's going to be commercial development or residential. What's coming up here?
I mean, there's just a lot of, there's Macrotech, which is Lotha, then there's Birla, and now it's going to be Bombay Dyeing. Just think about what will happen, and there's just one road.
Yeah. The road's not getting expanded.
No, but look at the stock, right? Market cap of about 3,000 crores.
Yeah.
On that, there is cash flow of 5,000 crore which comes in. You become net debt free. The minute you become net debt free, your terminal value changes completely. Now, what happens after that? They will develop the land and the cash flow comes in them, right? So
There is a bit of tie-up which will happen. They will share some upside in terms of the revenue as well.
yeah. So if that so one is that you understand that, okay, you clear the debt. What happens to the company? Will it be like a net debt company with little bit of upside, which will come from the operations of from the real estate deal, but the core business would really be textile in this case? Then the stock has to be valued very differently. But if you add that annuity factor in and assume that once the company becomes net debt free, they would be in a position to expand, they would be in a position to take the brand higher, they would be able to rebuild the textile business, then it really becomes a very different, kettle of fish. The stock in the meantime has seen a run up. This is a deal which, in a sense, ET Now reported. This is a deal which has been in the works. So in the near term, to judge that what would be the upside would be difficult. But yes, the complexion of Bombay Dyeing changes completely because now it becomes a net debt-free company.
And I think that's the biggest point, that the debt which was on the books will go away. We'll try and probably catch up with the management to get more details on that as well at some point of time and get details. But nonetheless, let's move on and talk about the other stock, and that's Axis Bank. And the reason we are picking that up is Macquarie has managed to meet the MD and CEO, and they have come back quite positive. The bank, of course, has maintained the long-term guidance of around 3.8% on NIM, but they are talking about how levers are available, and the endeavor is to kind of push it higher. So they're not willing to give a number out in terms of higher guidance, but the optimism is something which is trickling in from that report as well. They said that the Citi acquisition has panned out better than expected, in the sense that there has been no major attrition at the leadership level. There has been no major churn even at customer level, because that was the big concern, whether the customers who are used to getting the Citi kind of service, will they be okay with Axis? But what the feedback they are getting is the fact that the customers are still staying put. The deposit and the wealth AUM from Citibank have been trending upwards. The credit card is also now running at 3x the level which was prior to acquisition. So a lot of questions were asked around the net interest margin and how they're likely to hold up that, as well as Citi acquisition. But I'm guessing, Nikunj, now that Citi acquisition, they have proved it. Time has passed and we have seen they have managed to kind of digest it well.
So Nisha, let's look at Axis Bank. I mean, I think for me it becomes more like a special situation stock because there are two factors suddenly are at play. The credit card business scale up and the insurance business, how they're able to make it very linear. Unlike, you look at ICICI Bank, okay, they've got presence in all the businesses. Those businesses are something which is already part of sum of part. So now they pretty much would be a play on linear growth. Then you've got SBI, again, you know the value of all the subsidiaries, you put them in sum of part. There are no listings in the near term in terms of or SBI mutual fund. So there would be a linear growth, and that is what markets would be changing the terminal value. With Axis Bank now, there are triggers. And those triggers, if they move in the right direction, it could lead to the perception re-rating for Axis Bank. But it's not easy to turn around at the credit card business, and similarly the Max business on paper is great, it's a great acquisition, but for them now to become big in a very competitive market, it could take some time. Now when it comes to the banking book, I think the storm has come and gone for them. They've been conservative, they're maintaining the return ratios, they have capital buffers. I don't think there is a problem whatsoever. Is there scope for Axis Bank to outperform in the near term? I think it can outperform in the near term. And when it's outperform in the near term, I'm comparing that with SBI, ICICI Bank and HDFC Bank.
Right. Okay, let's move on. And, since Bombay dying is the hot one and topic of discussion since last evening, let me welcome on board Rahul Anand, the CEO at Bombay Realty, joining into the show right now. Rahul, firstly, how is it that you're going to utilize the proceeds of the monetization from this land parcel?
The proceeds of this, I mean, this is all contingent on shareholder approval, but the proceeds of this, when they come in, will primarily be utilized to eliminate our debt, which is there on the book. So this is just part of our board strategy, which started last year, that we wanted to first reduce the debt and then basically eliminate the debt. So we put part one of the strategy to work last year, where we sold a lot of our inventory in ICC. And abhi strategy ye hai ki with these proceeds, hum pura debt apna eliminate kar denge, and we will have money on the balance sheet to fund our future projects. और ये पूरा the whole aim of this exercise and the vision that was laid out by the board was singularly to create sustained shareholder value and create wealth creation for our shareholders.
So how much debt would be reduced and how much money would be on the balance sheet? And what really would be the timeline of this deal?
So the debt will be completely eliminated with this. It will become zero. And we will have money on the balance sheet as well. That exact amount of money, we are still working on that exactly how much will be there on the balance sheet, but the debt will become completely zero.
Right, so Rahul, this deal has been the highest ever land deal that has happened, right? So what is the present situation according to you when it comes to pricing, etc. in Mumbai real estate?
See, I think that there is a lot of buoyancy in the Mumbai real estate market overall. I think international investors, developers are fairly positive about Mumbai real estate. Residential has been doing well. I don't know about whether this is the highest price deal. I wouldn't be in a position to comment on that. But we found, from our perspective, we thought that this was the right valuation as per what was the direction of the board. So we went ahead with this. But overall, I feel that there is a lot of buoyancy in the Mumbai real estate market from international players and also from local developers. And there is a lot of opportunity that people see, not just in residential, but across sectors.
So what would be the main focus after this deal for the company?
Going forward, हमारा जो focus है, it will continue to stay on real estate. Our board has given a very clear vision that we have to focus on the realty business for future growth and profitability, because उसी से sustained shareholder value आएगी. हमारे पास अपना existing land bank है, दादर में है, थोड़ी और जगहों पे है, मेन हमारा दादर में है। और उधर से उस लैंड बैंक इटसेल्फ जो ऑलरेडी हमारे पास है, हम ऑलमोस्ट 3.5 million square feet of development we can do as a combination of residential and commercial, mainly led by residential. And that itself will give us the top line of almost about, has the potential to give us the top line of about 15,000 crores in the next couple of years. So हम उस पे focus करेंगे अभी. We have a zero debt company. We will have a zero debt company, and we'll have some money on the balance sheet. So we will use that to fund the development on our own land bank. इसके साथ में we are also open to doing joint ventures and joint development with like-minded partners.
All right, thanks very much for giving us that perspective and exclusively speaking with ET Now. So that's the nitty-gritties of the deal, that it will be used overall to eliminate the debt and have funds for their future projects, and the vision is to create value for shareholders. That's the stock price of Bombay Dyeing, and sure has been a buzz this year, but in particular over the past few trading days. But what's the outlook on the markets, which have seen a great run up? Where is D Street headed in the midst of this hefty bull run? Let's listen in to some of the biggest market veterans.
Indian market, has a tremendous journey in the last few years, and it's shining very well in the global arena as an economy, as a market capitalization, and by all standards, it's something great news for India to celebrate.
All the good news are there in price. That does not mean that market is going to fall today or tomorrow. This may continue for 1 month or maybe for 2 months. But of course, it is not going to last forever. 100% it is euphoria. It is you can say that FOMO or whatever the terms we use in this market. So people are still fascinated about now penny stock and cheap stock and chota price ka stock. SME also, I think psychologically people treat that SME like a penny stock. I think so. SME is not a penny platform. Let me clarify this thing.
The country is firmly, on track to continue its growth rate, being one of the fastest growing economies in the world. And for a change, I think this milestone does not sort of scare you. I think this is a milestone which is backed by fundamentals, which is backed by optimism that this growth rate is going to continue. And therefore, I think it gives confidence that this is just one of the milestones. There are many more which we need to conquer as we move ahead. I think one has to be definitely optimistic because there is still a lot of room ahead for the economy in the markets, but extremely, extremely cautious of not getting sucked into this FOMO kind of a situation.
Once again, euphoria which has made a comeback. So I think what I feel is that the mid caps and small caps could take a bit of a breather, and you're seeing that on the screen today with the downtake, and this could continue for some more time because there is clearly room for some downside. But I think the focus is really going to move to the large caps from here. So the large caps can make up for the underperformance of the last couple of months is what the view is for the next few weeks. And we do see the Nifty gradually moving towards a level of 20,400. I know it's not big in percentage terms, but unfortunately, I don't have large targets to work with because I do believe that the Nifty is going to be in that band of 19,500 to 20,400.
Now, the GIFT Nifty indicating some more positive upside for us. In fact, now counting down closer to that 20,200 level. But in a boost for local outsourcing push by the centre, Tesla is now planning to source auto components worth about $1.7 to $1.9 billion from India alone. Now, this is nearly double of what we saw last year. In fact, let's hear out what Commerce Minister Piyush Goyal had to say about this announcement.
Tesla already last year bought $1 billion of components from, I think, all of you sitting here. I have the list of companies who supplied to Tesla. This year, their target is nearly $1.7 or $1.9 billion, what they mentioned to me. Yesterday, I had a conversation with some of the other auto industry participants, and they also indicated that they have interest in coming to India. And therefore, I'm convinced that this is the future.
All right, let's move on and take note of some of the stocks that will be in the spotlight. Brokerage houses have initiated some recent notes. You've got Investec, which has initiated coverage on Fusion Micro. Prabhudas Leeladhar has initiated coverage on Suntec Realty, and Incred on Data Patterns. Let's find out a little bit more from Vamakshi, who joins in with some of these fresh brokerage notes. Morning, Vamakshi.
Well, yes, let me first start off with Fusion Microfinance. We have a note coming in from Investec, and they have highlighted that overall the industry is quite resilient and structural developments are in fact creating a very strong outlook. The company does have a prudent expansion strategy, and overall they're expecting a very strong AUM growth of almost 25% CAGR. That coupled with profitability of almost over 20% return on equity over the next 3 years. So given all these positive factors, Investec has initiated coverage on Fusion Microfinance with a buy rating, target price of 780 rupees per share. Apart from that, keep an eye out on Suntec Realty because Prabhudas Leeladhar has also initiated coverage on this stock. They're expecting the company to post a pre-sales CAGR, pre-sales to in fact grow by almost double over the next 3 years. Strong cash flow generation is also expected to step up new project additions. They're expecting a revenue CAGR of nearly 83% and EBITDA CAGR of 123% for Suntec Realty from FY23 to FY26. So given those factors, Prabhudas Leeladhar has initiated coverage on Suntec Realty with a buy rating, target price of 565 rupees per share. Keep an eye out on Data Patterns as well. We have a note coming in from Incred, and they have highlighted that the robust order wins continue to accelerate the near-term growth target for the company. High growth is expected to sustain as the share of the production contract rises. They're expecting a revenue CAGR of almost 40% from FY23 to 26, and on the back of that they've actually gone ahead and initiated coverage with an ad rating. They've given a target price of nearly 3,000, which represents a significant upside from the current levels. Apart from that, lastly, we'll also focus in on the sugar sector. We have a note coming in from DAM Capital, and what they have highlighted is that the demand supply is in the favorable zone. Domestic sugar prices are seen moving up as well. The ethanol blending program is also progressing quite well, which is again a positive factor for most of these sugar counters, and they're also expecting that the global sugar prices are expected to remain firm in the medium term. So given all these factors, DAM Capital has initiated coverage with a buy rating on sugar counters such as Balrampur Chini, Triveni Engineering, Dalmia Bharat as well as Dwarkesh Sugar. So keep an eye out on all these counters.
Okay, that's the sugar sector once again in focus, and a whole host of stocks which are going to be in focus on the back of the commentary from the management meets as well. The likes of Titagarh Railways, Axis Bank, JSW Energy and Macrotech Developers as well. Let me take it across to Harsh and get in the commentary from all of these management meets. Harsh?
Right, let me start off with Titagarh right off the bat. It aims to reach a rated capacity of 12,000 wagons per year by FY25. Currently at 650 to 680, that's a significant ramp up. In fact, over the next 2 months itself, they're planning to reach a capacity of 700 to 750. That's the target, and by end of the year, 1,000 wagons per month is what they are targeting. Backward integration will continue to aid margins as well, 100 to 150 bips or thereabouts. Indian Railways plans to procure 90,000 wagons by 2025. That's the largest, and it's in fact 5 times the number of wagons procured in a single year. Quickly moving on to JSW Energy, ramp up there as well. You're seeing that the company is well placed to achieve the 10 gigawatt of generation capacity ahead of 2025. That was the target. It aims to achieve 20 gigawatts by FY30 with a capital outlay of 1.1 lakh crore. 25% of this outlay is going to be through internal accruals, and the rest is going to be funded by debt. FY30 EBITDA is going to be in the range of 90 to 20,000 crore versus the 3,300 crore or sub 3,300 crore now. That's a significant push up. Quickly moving on, we had Axis Bank as well. Macquarie meeting up with them. Long-term guidance with regard to NIM continues to be 3.8%. They're going to endeavor to keep it at higher levels. They've not seen much attrition where Citibank is concerned, both on the employee front as well as on the customer front. So that's a positive. Both deposits as well as wealth AUM from Citibank have been trending upwards, a positive there, and credit cards originated by the Citi team is now running at 3 times the levels prior to acquisition. Now, when we're looking at Macrotech, lastly, Jefferies met up with them. They are seeing strong housing market both in terms of demand as well as supply. There's a fair balance on both sides. They believe that the upturn is structural, methodically growing to deliver a 20% long-term sales CAGR is what they're targeting. Lodha's strategy is to drive volumes while keeping prices affordable. FY24 pre-sales and cash collection targets are well on track, and even after cutting debt below the guided levels, management continues to see excess cash surplus in FY24. So positive commentary across the board from all these four managements.
All right, thanks very much for giving us those details. We've got Hemang Jani as well joining in on the show. Hi there, Hemang. Good to have you on board. And the standout performer yesterday in trade was clearly those PSU stocks, which had a pretty strong run up. What's your assessment as to how they've moved and what's the outlook?
Yeah, good morning. So yes, we've seen big correction day before, and where stocks actually corrected anywhere from 5 to 15%, and the index itself was down about 3%. And yesterday it was good, smart pullback. So our take is that one really needs to watch for some sort of a consolidation when it comes to the broader market, because when an index has gone up by, let's say, 35-40%, 3 or 4% correction is actually a very, very small. So there is always some possibility of consolidation or correction, and one needs to be a little mindful of that. However, at the same time, the index or the large cap stocks continue to show a lot of resilience even when we had the volatility. So I think for the time being, at least near term, it would make more sense to focus on some of the large cap banks or the large cap stocks where we are seeing a fair bit of stability and strength. Even IT is coming back in a major way. So I think it would make sense to focus on these spaces.
Hemang, hi, morning. Have to talk about what's going on within the railway and the defense as well as shipbuilding names, right? And let's pick up railways first. For someone who's looking at a long-term time frame and, as a value investor perhaps, do you sense that they also should take some profits off the table right now?
I surely think so, Aisha, because, we've seen, if you see last about 6 to 7 months, the PSUs, the railways, the capex, and ancillary theme around this entire PSU has actually gone up quite a lot. And in terms of valuations, in terms of market cap, definitely it looks a little, frothy. So I definitely think that no matter, 2 year, 3 year, this theme may look great, but when people don't take out profits or, create some liquidity, they end up kind of getting into a bigger trap. So I definitely think that it makes sense to kind of take the profit off the table and look out for better opportunities and better entry point.
Okay, fair enough. That's the view coming in on all of those railway stocks. But what's the outlook as well when it comes to the recent deal as well that we've seen culminate, for instance, with Bombay Dyeing, the biggest land deal in Mumbai? What do you believe this is indicative of? And, thereby, what would be your outlook on real estate stocks, Hemang?
So massive deal. Just to put things in perspective, the market Bombay Dyeing today is about 3,000 crore, and the company is sitting on a debt of almost about 3,000 odd crore. So this to put together, the total enterprise value would be somewhere close to about 6,000 crore, and against that a single deal is about worth almost 4.5 to 5,000 crore. So that's a massive one. I think it's a big monetization. The only thing that remains to be seen is after this particular deal is over, what is the intrinsic value or the assets that Bombay Dyeing is left with, and what kind of additional value creation can be there. So given the focus on the reality and the outlook, I definitely think that this is a great deal, and maybe there is a scope for another maybe 15-20% kind of an upside in Bombay Dyeing stock over the next 12 months.
Okay, that's the take coming in on the Bombay Dyeing stock. Let's address what else has been holding up in the market. And Hemang, clearly one believes, or rather many experts that we've been speaking to say that it's time to bet big on banks and even IT for that matter as a defensive play. If at all you are bullish on banks and IT, what are your top picks here?
Very positive on banks. I think it's in between it had underperformed, but now there's a catch-up which is at play. The incremental cash reserve ratio relief has come in from RBI. I don't see any major challenge on the growth or the NIM front per se. So large cap continues to like SBI, ICICI Bank, HDFC also after a long time is showing a little bit of traction. So these are the names when it comes to the large cap names. Mid cap, I think we should focus on two names. IDFC first, where we had an entry of big investor. Also, Federal Bank is something that is delivering consistently good performance. So I think these are the names that one can really go with in terms of banks. IT, surely it's a value play. A little bit of zigzag here and there based on what's happening in US markets. But I think TCS on the large cap front, and to some extent, some of the small mid cap names, Tech Mahindra, Naukri, these are the names where we continue to have a positive bias.
Kunal, you're also betting big on IT, right? Any stocks that one could go long on or buy at this level?
Well, I think large cap IT stocks are something which have underperformed, so they could pick up pace. And I strongly believe that the likes of TCS, Infosys, they've given signs in terms of price volume breakout, so they could maybe not underperform going forward. Of course, the price returns over the return expectations over here could be significantly less as compared to the mid cap IT names because of the beta nature. But then when you're looking at strong breakouts on large cap names, they are more sturdy and stable as compared to the mid cap stocks, which can be a lot more volatile. Even the likes of Tech Mahindra, which has been looking very attractive at the 1200 mark when the stock had given a breakout. L&T Infotech, Mindtree, Coforge is something which has looked quite exceptional on the charts. Birla Soft, I think the stock has gone through a mild correction in the last 3-4 days. So I think if there is another correction of maybe an 8% or 10% for Birla Soft on an average, that could be a classic stock to buy from the mid cap IT names.
All right, let's move on then and hear it out from Rakshit Ranjan and Marcellus Investment Managers and Rahul Shah of Motilal Oswal, sharing some of their top fundamental stock ideas.
TCS is in our portfolio of large cap consistent compounders. And then we have LTTS, Tata Elxsi in some of our other portfolios. And again, disclaimer, clients, families, and ourselves, we have exposure to these stocks. So these are some of the names on which we have increased our positions over the last 12 months incrementally. Because the concern of the market was US going through recession and hence let's exit IT, etc. That gave us some opportunity, some pockets to increase exposures in some of these areas, which we've done, wherever we see the resilience being there to the businesses.
If we look at the entire cap goods as a place, so I think my preference would be more on the terms of the private players, rather than DHEL. So maybe at this price, I would avoid DHEL. Maybe at correction, I would look at it for a longer term play. But if I have to look at something like Siemens or something like ABB, though the valuations are expensive, but I feel that there will be a safety and the risk versus reward would be quite favorable from here. So I think again here the returns could be also a very moderate kind of a return. The stock has done well, so I think these are only 12-15% compounder from here. So that is what it looks like. So my sense is I think again Siemens and ABB remains the top bets in that entire sector.
Okay, Hemang. Let's be specific in terms of why SBI has underperformed. Even though yesterday also PNB, BOB, everything is coming back. But in this year, SBI has done nothing.
Yeah, so Nikunj, if you see a last quarterly number, there was clear pressure on the NIMs and the numbers were not that great. Now, when the stock has run up, let's say in the last about 1.5 years, 2 years, it's been one of the best performing names in the banking. So you go through a phase of consolidation when the quarterly numbers are not looking that great. Also, partly because, PSU, typically you don't have too many options in the large funds, don't necessarily go out for smaller names like PNB and so on and so forth. However, like BOB and Canara is something that they have also invested in. But there are very few options when it comes to large investment. So there is going to be a case of a little bit of over ownership. So I think these two factors would have led to some sort of an underperformance, but by no means SBI is looking weak or, it could just go through this kind of an underperformance for an extended period of time. I think it's looking quite ripe for a big run up. And as we see more clarity on the growth and quarterly numbers are there, people would surely come back.
Kunal, as a cluster, should one look at PSBs in the near term or the large private banking names?
Well, very tough one, Aisha, because both of them are looking attractive in their own spaces. Now, for example, if someone is playing for a turnaround and looking out for large cap names, then I definitely believe that the private sector banks fit the bill quite perfectly over there, because many of the private sector banks have been huge underperformers. And I'm not talking of the breakouts also which have happened, because even if you talk of relative breakouts, the percentage gains post a breakout is very meager for these stocks as compared to the time spent into consolidation. And even there are many large cap banking stocks which have actually been underperformers in terms of prices, and these stocks have nowhere close to their previous highs. So there is a potential upside for these stocks, more of a steady gain for these names. But the PSBs are the ones which are high beta in nature. They are a lot more, they can generate a lot more higher alpha as compared to the private sector banks. Now, and what we are talking of is private sector PSU banking stocks going through a second round of breakout. I call it second round because in 2022 second half is where these stocks had given an exceptional move. Many of the PSU banking stocks, and I'm talking of the mid-cap names, small-cap ones specifically, they'd gone through returns of 100% to 50% approximately in that time span. 4-5 months of consolidation. Move started back in the month of May, June for these names, and now they have confirmed a breakout of the previous 2022 highs. So which means that this is the second move of a breakout for the PSU banking stocks, and I believe it could be more stronger than the previous ones which you've seen in end of 2022.
The other pocket which saw a lot of action yesterday, again, those penny stocks. JP Power Ventures, GTL Infra, a lot of penny stocks actually yesterday. Then you got Infibeam Avenues, a lot of penny stocks, Reliance Power, they've started mushrooming up once again. Hemang, once upon a time, IRB Infra used to be the go-to stock. But in this rally, when all the construction stocks have made a comeback, infra stocks have made a comeback, IRB Infra, even though I think they've had a very large investor from one of the hedge funds, it's at the bottom of the barrel. Do you track this one?
See, mid-cap construction names, some of them have done pretty well, Nikunj. When you look at, one of the, let's say, Mumbai-based company, J. Kumar, and, couple of Andhra-based construction company, they have done reasonably well. But IRB, I honestly don't track in detail, but I can see that the performance of the company has been quite steady. Over the last 3 to 4 quarters, they are reporting about 720 odd crore kind of a profit, and net profit level 200 crore, and a lot of interesting order inflow. But somehow the stock has not performed in line with the sector or some of their peers. So I really don't have any specific view here.
Okay, those are a couple of these smaller names which actually held out in trade yesterday. A couple of other stocks which are going to be in focus as well. We've been flagging Bombay Dyeing, of course, after that deal for the Worli land parcel has finally been struck. It's a price consideration of 5,200 crore rupees, and it's a subsidiary of Sumitomo which has actually bought that land parcel. There's Adani Enterprises as well. That's going to be the other one in focus. Adani Wind has got a 5.2 megawatt wind turbine generator certification from WindGuard. So that's another stock in focus. There's IRCTC, which has got an MOU with MSRTC to enable the online bus booking via its bus booking portal now. There's, of course, Cummins as well, which has also unveiled one of the genset ranges for Delhi NCR markets. There's Bajaj Healthcare too, which has got an EIR from the US FDA for their API manufacturing facility in the state of Gujarat. So all of these stocks are going to be in focus. And then, of course, there's NBCC, which has bagged an 80 crore rupee sale order, which has signed an agreement to sell non-core Vizag asset. So that's another stock which is going to be in focus this morning too. But cement, Naresh, just wanted to get your perspective in. Yesterday too, you saw a good amount of spurt in some of the cement names. India Cements leading the charts with almost a 6% move. Any trading opportunity here, you think, in the near term?
So the first one has been Ultratech, which looks interesting. The stock has finally broken out into new 52-week highs, all-time highs. Did a pause also in the last few sessions. So that's a stock which should go towards the 10,000 mark, would have a stop loss below 8,400. The next are the smaller names which have done really well from the mid-cap space. But India Cements is interesting for the fact that although the stock is highly volatile, but the stock is now testing that 255, 260 mark, which has been the problem zone for the last almost 1.5, 2 years. It did see a spike to 300 in 2022, but every bounce in 2022 after that got hit at 255, 260. In the last 2 months also, we've made two tops around 255, 260. If it sustains above that, we could get a dash towards 300 levels. So I would go with say Ultratech Cement and then an India Cement, which would be, one should be large cap and one should be high risk mid cap.
Right. Okay, that's the take then coming in on, some of these cement names right now. Let's take stock of what else has been happening in the market. Of course, you are seeing that sporadic rebound coming in for, some of the IT plays. And pharma is the other one, right, Hemang, which has also been seeing buying, and not now, almost for a month now. You think any opportunities here to invest in?
Only, I think very smart pullback by some of the pharma names, and prominent ones. What we like at this point are Dr. Reddy's and Aurobindo Pharma. Aurobindo in particular is seeing a lot of traction, I think, in the last 3 months or so, both in terms of their operating performance and the stock price performance, both. It's done exceptionally well. Some of the mid-cap names like Laurus Lab, Granules, they continue to look okay, but one should really look at that as a tactical play, because the entire, the API segment that they are operating in, things are not that clear. But I think as a short term, maybe 3 to 6 months kind of a time frame, these two names are looking quite interesting.
All right, sure thing. Let's also get in a sense as to, what are some of the stocks that are on the brokerage radar this morning. And you've got a whole host of stocks that are in the spotlight. Container Corp, for instance, is on Jefferies' radar. They've got a buy rating. They've upped the target price as well, saying that road to rail cargo shift is seeing quite a bit of traction. Indigo or Interglobe Aviation is on UBS's radar. They've got a buy rating there with a 3,300 rupee target price, saying that overall the Indian airline capacity as well is likely to increase. Just wanted to get in your take then, Hemang, because there is that report from Jefferies on hotel versus airlines talking about how both are going to benefit from the domestic macros having slower supply additions in the near term. What's your outlook within this entire space?
Hospitality, hotels, I think continues to boom. We are seeing the occupancy levels, and as we approach the Diwali holidays, the winter holidays, I think things are going to heat up even further. Some of them have also expanded their capacity. So Lemon Tree, Indian hotels, maybe some of the smaller hotels, I think one IPO also is being launched today of the hotel company. So I think that space continues to invite a lot of investor attention. Indian hotels and Lemon Tree are our preferred picks. In terms of airlines, not too many options. Indigo is by far the largest player. I think the only issue that we recently saw was that, with their Neo engines and, some issues, and how quickly they will be able to find a replacement, because they have about 120, aircrafts with that engine. So that is something that we will have to watch out for. Also, the crude price is actually shot up, right? So I think Indigo, maybe if you have a correction of 5 to 7%, but hotel definitely continues to be the good play at this point of time.
All right, let's listen in then to Vineet Samre and Pankaj Murarka. They talk about some of the top sectors that they're positive on.
Even if the margins were to come off a bit, but I think the growth metrics would be there. The valuations are pretty reasonable, and what we talk about the economic growth, I think that should be played through the banking sector overall. Now, the choice can be, how one has to allocate between the banking and the non-banking financial companies. I mean, that is left to each one's individual assessment. But I think this is a good sector to own. I keep talking about IT as one of the sectors which I generally have a positive bias towards because of a simple fact that this is a very strong cash generating sector, and more importantly, this is a sector which also distributes a large part of the profit back to the shareholders.
Headwinds in both the sectors are behind. We are seeing in healthcare or pharma, we are seeing earnings growth coming back very strongly this year onwards. So pharma companies and aggregate as a sector will deliver strong earnings growth starting this year. And likewise for the IT, I think the worst of the headwinds are behind, and from second half of this year onwards, we'll start seeing growth coming back to the sector. So clearly, from a relative basis,
we find much more value in IT and pharma, and we are clearly taking money off some of these sectors which have done exceedingly well over the last, let's say, 18 months, which is essentially financials and capital goods, and putting that money to work into IT and pharma.
Suresh, the other big one which is worth revisiting again and again, I think, is Indiabulls Housing Finance. What a move, what a uptake, then what a crack, and then what a comeback.
So I remember discussing yesterday also, day before that, if somebody has the risk appetite, 160, 170 is a retest. The bounce back was pretty sharp. And why is it interesting is the fact that on very few stocks have actually reclaimed the close on, or say the opening price of 12th September, which is where we saw the big downtick. So out here, the high on that day was 191. The stock came almost closer to 189 yesterday. So it almost engulfed the move of the big downtick. So that shows a lot of strength. The only problem is the stock remains in derivative band, so one cannot take it in derivatives, one has to take it in cash. Technically, the trend is very clear out here. 160, 170 was the previous resistance. Retested it, and now is again trying to make a comeback. Now one can still be a buyer with a risk appetite. Stop loss now is below 170, so that's a deep stop loss. But technically, the stock has made that 8 to 12 months of consolidation and now started to trend up. Could go back all the way to 200, 230 levels, which is where it started falling from before. So technically, the structure is pretty positive.
Hemang, क्या हो रहा है Indiabulls में? What is happening?
So Nikunj, as we all know, it's been a jinx stock, and a lot of these stories have come about in terms of somebody taking over the stake, the existing promoters exiting, etc., etc. But latest what we've heard is that there is going to be a capital infusion of about 20 to 22,000 crore in the company, and that would be at a significant premium, which will be book value accretive, and post that, once you have a clean management and a substantial capital, and the fact of the matter is that they have a very decent book size. Of course, a part of the portfolio was subprime, and there were asset quality related issues. But I think a large part of that is now sorted out. And once you have this kind of infusion and takeover, there can be some sort of a re-rating. Like, for example, Diwan Housing, when Piramal took over, there was an interesting opportunity in terms of playing that. So I think Indiabulls, you could see that. But as I said before, a large part of this is known in the market. The stock price also reflects that it's pretty much getting discounted. So how much more upside is anybody's guess? But I think this is what is driving the stock.
Okay. Sugar, another space which is worth revisiting. Nuresh?
Very interesting formations here. So the smaller names have already broken out. The largest name, which is Balrampur Chini, is getting close to that breakout today. Today could be that decisive day when it can break out. The stock is out of derivative band also. Now, if you look at the last 1 year, you have a top in, say, December, we made a top around 415, and the whole of December of last year. Then in April, the top is around 425 to 430, multiple tops. The high of August was closer to 423. The high of September is closer to 425. So you can see over the last 1 year, we've had almost multiple attempts around the 425, 430 mark. If that breaks out above 425, 430, it opens up a move all the way to 500 levels. So looks very promising. So Balrampur Chini is the one where the trade is still open. The next is, if you look at other names which are there, a lot of them have already broken out. So if you look at a Triveni Engineering, the stock is up 15% over the last 2 weeks. You have a Dalmia Sugar, which looks interesting, has moved up quite a bit over the last 2 weeks. So small cap stocks gave a breakout a week back, and they followed up also. Yesterday also we saw a recovery, but the larger name like Balrampur Chini could break out today.
Okay, fair enough. While we may have discussed these extensively, Naresh, just wanted to get in your take on the charts as well. The stocks that have had a pretty terrific run on a year-to-date basis, something like an IRFC, BSC, as well as Zensar Tech on the charts?
So, say, BSC is still relatively okay because the stock had peaked out at around 1050 levels in 2022. and today we are at 1350. Although the rally from 450 looks pretty huge, but the trend is still positive. One would ideally wait for a dip towards 1150 to initiate a buy. The risk reward is not great at current prices. But if you look at other names like IRFC has gone up from 35 levels in July all the way to 90 in this move in less than 3 months. So the move is huge, and also it had topped out around 30-35 in December of last year. So it's been a 3x even from the last previous top. So out here the risk reward is not great, would still be an avoid. Zensa Tech on the other hand is interesting because the stock has come back to the highs of 2021, and very few IT names have come back to those prices. The stock is actually making a huge cup, could consolidate here for some more time, and the next time if it crosses 570, 580, it would be a longer term breakout.
Let's put the spotlight then on the pre-open rates and find out what exactly we're seeing this Thursday morning. And despite a bit of a shaky handover from the rest of the globe for now, we're holding out around that 20,100 mark on the Nifty by about 0.5%. Hemang, good to have you on board. So thanks so much for joining in and sharing with us your thoughts. We're nailing it down to those mid-cap trading strategies from our chartist, Kunal.
Well, so, one of the stocks which recently have been giving a buy call was Balrampur Chini from the sugar pack. Yesterday, I think the stock managed to break past about the 415 mark. So would suggest a buy with a target of 445 and stop loss at 400.
Okay, let's find out what Naresh has picked out for the day. Naresh?
So I would maintain the buy on LIC Housing. The stock has broken out about the 430, 440 mark. Was consolidating around 450 level, saw a correction day before. Dipped down and retested the 438, 440 mark. Yesterday was a strong recovery. So classical flag formation here at 438 to 460 levels. Breaks out 460, opens up a target to 500. And also a multi-year breakout here. So expecting a move towards 500 in the short term, stop loss at 438.
Okay, there you have it. LIC Housing Finance, Balrampur Chini. That's what our chartists are picking out. Let's also take stock then, moving away from the markets with all the other top headlines. And tech giant Google is cutting hundreds of jobs in its global recruitment division. The job cuts come amid the broader pullback in hiring over the next several quarters. Employees that are involved in recruiting group reductions will receive emails with the intimation regarding the layoffs. Remember, Google's parent, Alphabet, announced an elimination of 12,000 roles, which will affect 6% of their total workforce. Keeping it with job cuts, Goldman Sachs has fired several executives in its transaction banking unit as per media reports, which comes after the violation of the firm's communication policy. Meanwhile, Citigroup is stripping out a layer of management in reorganization drive, giving the CEO Jane Fraser increased control. And the relations between the Russian President Vladimir Putin and North Korean Premier Kim Jong-un was on full display during the latter's visit to the country. According to reports, they discussed weapon and grain deals, the Ukraine conflict, among other things, along with accepting Putin's invitation to visit North Korea. And amid pressure from the opposition back home, the government has released the agenda for special parliament sessions starting next week. 4 bills will be up for debate in the tentative list. The discussion is likely on the Chief Election Commissioner's appointment bill. And the 24-year-old health worker has become Kerala's 5th confirmed Nipah virus case in the recent outbreak. It has seen 2 people actually succumb to the virus. Currently, 76 people are in high-risk contact category and they remain stable. 13 people have mild symptoms under observation.
Now for the very latest cover on Dalal Street, let's go to Sharath.
Focus we are having CI Automotive, and the buzz in the street is that company's divestment of the Germany's forging business that is expected to be completed over the next 2 weeks. Now the important thing is this: the forging business was already impacted because it was a low margin business, and also there was a threat coming from the EV players in the European Union. Also the calendar year 2023, that's what the street is estimating, will be a bumper year because the cash realizations will be coming in for the company because of the sale, and there will be forex gains coming in the PL account. Also the cash on sale realized may be used to fund projects in the Indian projects. Also do remember the company is expected to receive roughly 25 million euros in cash for this deal, and this will be coming from a PE player, Mutares, which is a German private equity player. This roughly translates into 223 crores of inflows expected, and the deal is expected to happen, which was announced already earlier, at almost 55.5 million euros. Overall, if you look at the European business, 37% of the total revenues of the company come from the Europe's business, and Europe's business is actually divided into two important businesses. The first one is the car forging business, whereas the forging business from the Germany market is being sold, and the second business, which is still there with the company, is the metal castings business. And lastly, already companies having 4 large orders in the European Union from the aluminium, steel forgings as well as the car gear business.
All right, thanks very much, Sharath, for giving us those details. We'll watch out for CIE Auto. Meantime, UBS has a buy rating on Indigo, but they say that the impact of the Pratt & Whitney engines could be more than expected. Let's understand what exactly the note has to say. We've got Samit here with all those details. Samit?
Well, if you see the recent issues that have cropped up for Indigo is the fact that Pratt & Whitney engines will now be recalled. Earlier expectations were around 1200, but as per reports, around 3000 engines will now be inspected till calendar year 2026, which means that incremental engines for inspection annually could be in the range of around 600 to 700. Also, because of the number of engines that will be recalled will be much more, the waiting time period has also increased to around 250 to 300 as against 60 days that was earlier expected, and this will be spread out till 2026. So it does not mean that all the impact of this would come in one financial year, but it will be spread out over the next 3 financial year. But what UBS is saying is that the engines that would be recalled are nearly 27% of the total Indian Airlines capacity, and the incremental impact would be around 12% of the total capacity, and this entire impact will be coming in from Indigo's side only, because Indigo and GoAir are the only 2 airlines that are operating with Pratt & Whitney engines, and GoAir has already shut down its operations. So the incremental impact will be coming in fully from Indigo's side, but the major negative coming in here is that the waiting time period has now increased to 300 days, and this impact will be spread over the next 3 years. Now, along with this, UBS is also saying that there could be a bigger impact when it comes to capacity addition for the company, and given the fact that fuel prices are also at a 10-month high, this could also be incrementally negative for Indigo going forward. However, the long-term view continues to remain positive on Indigo. They have a target price of 3,300, and structurally Indigo is well placed in the Indian aviation industry as per UBS.
All right, thanks very much. We'll be watching out for Interglobe Aviation in trade today. Meantime, banks are in focus yet again. Why is that? We've got Nikunj discussing Axis Bank, and he also believes that there could be outperformance. Listen in.
Let's look at Axis Bank. I mean, I think for me it becomes more like a special situation stock because there are 2 factors suddenly are at play. The credit card business scale up and the insurance business, how they're able to make it very linear. Unlike you look at ICICI Bank, okay, they've got presence in all the businesses. Those businesses are something which is already part of sum of part. So now they pretty much would be a play on linear growth. Then you've got SBI, again, you know the value of all the subsidiaries, you put them in sum of part. There are no listings in the near term in terms of, or SBI mutual fund. So there would be a linear growth, and that is what markets would be changing the terminal value. With Axis Bank now, there are triggers. And those triggers, if they move in the right direction, it could lead to the perception re-rating for, Axis Bank. But it's not easy to turn around at the credit card business. And similarly, the Max business on paper is great. It's a great acquisition. But for them now to become big in a very competitive market, it could take some time. Now, when it comes to the banking book, I think the storm has come and gone for them. They've been conservative. They're maintaining the return ratios. They have capital buffers. I don't think there is a problem whatsoever. Is there scope for Axis Bank to outperform in the near term? I think it can outperform in the near term. And when it's outperform in the near term, I'm comparing that with SBI, ICICI Bank and HDFC Bank.
Okay, let's also tell you about the index strategies coming in this morning and whether there is a consensus build up after the 2 days of move that we've seen in the equity markets. Monday, of course, their all-time peak, and then, of course, that volatility that stepped in on Tuesday. And yesterday, once again, we were on the go. No trade, says Kunal, on the Nifty, and it's a hold for Naresh, so not really a consensus coming in there. For the Nifty Bank, though, Kunal recommends buying it, and Naresh is saying hold on to your positions on the Bank Nifty. Okay, just marking the big buzzers from yesterday. Of course, there was Indiabulls Housing, which held out by about 12%. There was PNB, which was a buy call coming in from Kunal. That is the other stock which saw traction of about almost 9% in trade yesterday. And today, too, most of these names are seeing a smart follow-through. Kunal, 73 now on PNB on the pre-open already. Would you revise your strategy here or perhaps move targets upwards?
No, I think from 75, which was the target earlier given by me on PNB, I'm revising it already to 78. But my sense is that it may not just be a 78 bound target for PNB. I strongly believe that these are very strong breakouts which have happened for many of the PSU banking stocks. PNB, for example, has scaled up 40% this quarter. But when you try and compare this with the previous rally in 2022 end, where the stock was almost at 28 rupees and then it jumped up in by end of 2022, almost I think 63, 64 mark for PNB. So that was a return of more than 100% for the stock in that kind of a time span. I would expect something similar going around for PNB this time around. So I would probably expect the stock to head up to even levels of 85 to 90 levels over the medium term. But from a short-term trading play, I would still maintain the target of 78 for PNB.
Naresh, is the sense that we are going to open at record highs this morning? Are you ready to bring out the balloons, pop the bubbly with respect to what we're seeing at the pre-open rates?
So continue to expect new all-time highs. The view remains same. The target price for this move should ideally be 20,500 and 19,800 should act as a base. So yes, new all-time high. Would be interested in seeing a new all-time high on Bank Nifty going forward. That's the index which has done relatively underperformed the rest of the name. So that's the space. If that starts moving up, it becomes easier for the Nifty as well, given the 35% plus weightage. So positive on the indices. The recovery in the mid cap and small cap would be slowly and steadily. So the concerns are more there on the mid cap and the small cap.
Okay, concerns continue to remain when it comes to the small and the mid-cap end of the market. The texture of the market is pretty much status quo, like we've been flagging off since morning. Of course, you've got global news flow as well to digest, what with regards to the US CPI data. Having said that, you've not really seen much of an elevated reaction or any reaction for that matter from the US markets overnight as well. It's pretty much right off the bat, and US inflation has come in pretty much along expected lines. A little higher though than what the street was penciling in. It's risen about 0.6% on a month-on-month basis for the month of August, as opposed to 3.7% on a year-on-year basis. But I think the bigger point is, or the question is, whether or not the Fed is going to be in a hurry to raise rates to try and curb inflation. The answer is clearly no. They're going to remain in pause mode, as has been, the action that we've seen from the MPC as well back home, that even if inflation levels have been elevated, you've not really seen a hike coming in thus far. But yes, it continues to be a smart rebound for us, and this morning too, it's a rebound or a fresher uptick that both the Nifty as well as the Sensex are indicating. The broader markets though, while yesterday they did see a bounce back, let's see, that seems to be a bit of a limbo. Many still debating whether the broader markets are in an overheated zone. Are we going to see a bigger fall from here? Should you profit take or not? So the jury is pretty much still out there. Let's see what happens to the broader end of the market. market. 17 seconds to go before we hit the gong for the day. All sectors actually, ex-auto, managed to gain in trade, and IT was a little bit off on a back foot. But having said that, IT has been on a bit of a rebound trend. So that sector as well has been on the go. Nifty PSU Bank, of course, gained the most yesterday. So let's see whether that trend continues or not. 20,100 plus levels on the Nifty spot right now. That's an uptick of about 40 points. We've started off very well. I can see L&T, Hindalco, Coal India, Tata Consumer, Tata Steel, Adani Enterprises. These are all in the green on the first rates as we speak right now. Let's address what the newsmakers are up to, and definitely want to start off with what Bombay Dyeing is up to after striking that mammoth deal for their land parcel in Mumbai. 15.6% of a gap up is what you're seeing on Bombay Dyeing as we speak right now. There's of course IRCTC as well. They've signed an MOU for now enabling online bus booking as well via their bus booking portal. That stock holds up about 1.5%. I want to see what the first rates on the Nifty Bank are, whether that's managing to beat the Nifty performance or not. Slightly so, 46,052 odd levels on the Nifty Bank as we speak right now. What are the constituents of the Nifty Bank up to, and especially the PSB pack, because that's the one which has been charging up ahead of late. I can see IndusInd Bank, ICICI Bank, they're all holding up in the green. Let's see what a PNB, BOB, etc. as well are up to. IndusInd Bank starts off in the green. PNB 72.80, BOB up nearly 1% as we speak right now. Canara Bank marginally in the green. What's the big boy SBI up to? And then let's check in on what the likes of an Axis, ICICI Bank and then HDFC Bank are up to. They're all marginally higher, one would say, across the board when it comes to the banking pack. Next up, of course, let's check in on the big movers from yesterday. Coal India, Tata Consumer both start off in the green and see a smart follow-through price action from yesterday. Remember, yesterday Bharti was a big mover, held out by about almost 3%. So definitely want to revisit this one too. And Bharti also is seeing marginal bit of a scale up. 917 is where that stock is right now in trade. Then, of course, I want to see what the pharma pack and IT as well is up to, whether you're seeing any uptick on the TCS Infosys, which took a bit of a breather yesterday. Don't know how they've started off in trade today. Wipro, I can see, is holding up very smartly. Infy, 0.5% higher. And now the Sensex as well catches up with the Nifty. It's hit a record high for itself. Coforge, I can see, is a very smart mover today. So I think it's IT, which is the dominant trend today. It's not as much banks, but IT is where all the action is. And that's where the big movers are. But yes, Aman, Sensex a record high. What are the constituents doing?
Yep, and that breadth is skewed firmly in favor of the gaining side as well. And within the broader universe, take a look at names like a Vaibhav Global, a Bombay Burma, and then some of the usual suspects that have been gaining of late, the likes of a Rail Vikas, Bank of India. Of course, recently there has been that deep slide, but today it looks like in tandem with the rest of the market, they're all rising in NBCC or even a Balrampur Chini that we've been discussing. Ircon International back on the gainers radar, as is a Bharat Forge. All right, with D Street at record highs, let's find out, Kunal, what your takeaway is